Today, Gaming America will be speaking with Lloyd Danzig, the managing partner at Sharp Alpha Advisors. He runs a venture capital firm that is involved in the sports betting industry. So we hope to learn about this vital segment of sports betting. Thank you for speaking with us today, Mr. Danzig.
Thanks a lot for having me. Happy to be here.
Quite all right. First question, I want to know sort of about your background and how you wound up in venture capital in the sports betting sphere, please.
So I have a background both in finance and in engineering. Spent most of my career either as an investment professional on Wall Street and also a bit as a data scientist. Personally, I've always loved and been enamored by the business of casino gaming and sports betting. First of all, the math that allows the industry to work, the way in which the law of large numbers ensures that the house wins over the long run without any certainty as to day-to-day outcomes was always something that enamored me. And then personally, to this day, I owe most of the richest social relationships that I have in my life to fantasy sports leagues, March Madness brackets, Masters pools, people that I bet against, bet with on sports, on video games, things like that. And so the repeal of PASPA, I was a bit in the right place at the right time to find a space that really allows my passions and skills to overlap quite nicely. So a bit of good luck and a lot of experience personally with sports betting, fantasy sports, and online gaming is what brought me here.
Cool. And I'd like to ask about a bit about Sharp Alpha Advisors. What would you say is the sort of mission of the company?
Yeah, I think, the one-liner is that we specialize in sports betting and real money online gaming. Overarchingly, my macro thesis has been based on what I perceive to be a convergence of all the things under this umbrella that I refer to as competitive entertainment. Competitive entertainment is any form of fun where winning and having skin in the game is what you derive the utility from. And so that can be playing sports, watching sports, betting on sports, playing video games, betting on those video games, betting on professional video game players, Peloton races for money, every sort of, iteration of things under the sun. And also, and adjacently, collectibles, merchandise, ticketing. And so, especially since the repeal of PASPA, my view was that there was a great opportunity for early stage companies to bridge the innovation gap that would need to be bridged in order to allow the interoperability of all of these different currently adjacent revenue streams and sectors. And fortunately, since PASPA in the last roughly 4 years, that has been validated to a degree by the plans of companies like DraftKings, which are rolling out NFTs and tokenized experiences, Fanatics, which is trying to offer a one-stop shop for betting and ticketing and merchandise. And we continue to invest in the companies and founders that we believe are building the infrastructure, the picks and shovels of the competitive entertainment gold rush, if you will.
Sure. I had a quick follow-up question. So in one of these interviews before, I talked to a man who was convinced that esports betting was going to overtake traditional sports betting in a matter of years, 2 years. What would your response to that sentiment be?
I don't know about overtaking traditional sports betting, perhaps overtaking the handle of some individual sports. Certainly, I don't think NFL, NBA, MLB, NHL combined would be easy to overtake. And undoubtedly, right now, esports betting is a lot more popular overseas than it is in the U.S., and so adoption has not been quite as fast here. But this is absolutely something that I am extremely bullish on. There's a long-standing mantra among people who focus on technology and venture capital investing, where you look at what the youngest possible cohort of users is doing every day and what type of content they're consuming and games they're playing. And especially if you're investing with a 5 to 10 or longer year time horizon, you project that forward. And so what are most kids doing now? They're growing up playing Roblox and Minecraft and watching video game streamers rather than, conventional linear TV broadcasts. And so I absolutely think that esports betting, including in the US, where adoption has not been quite as steep as perhaps in Europe and even more so Asia, there's no doubt that is on the rise. But I would pause before going as far as to say I think it will completely overtake traditional sports betting. And the other thing I would add on is that there also is a lot of interest in adjacent or similar types of betting. Users, recreational video gamers being able to bet on themselves, being able to bet against their friends, being able to bet on the outcome of games being played by popular streamers that aren't necessarily in professional tournaments. And I think if you add all those categories, if you encapsulate all of that, that is something that I could perhaps see starting to rival the handle level seen by traditional sports betting.
Interesting. Okay, well, back to Sharp Alpha Advisors. Thank you for that. My next question is about the sort of companies you choose to invest in. I was wondering by what criteria you suss them out, and how do you choose where you're gonna invest your money into?
Especially at the early stages, what you're really doing is making a bet on the team and the founders more than anything. The original Netflix pitch deck talked about delivering DVDs in the mail. And certainly that's not the product that actually made those investors their money. And so really you're looking for billion-dollar founders more than billion-dollar companies per se. Now, of course, part of what it means, at least in my view, to signal that you are a billion-dollar founder is being able to articulate the compelling solution to an important problem that you are uniquely qualified to monetize at scale, and also why now is the best possible time to solve this problem. And so I think those are some of the core things we look for, along with the founder's vision being parallel and congruent to our macro thesis for how things are unfolding. And then lastly, because of where we're positioned in the industry, I'd say it's a good time to be a strategic value add investor in the space. There's a handful of us that fit that criteria. We really try to be very selective and do deals where we have the opportunity to add a ton of value and can help de-risk the company ourselves. Because of that, because of we expect and we do have such close relationships with the founders and founding team, we also look for people who we enjoy spending time with and can see ourselves in a 10+ year day-to-day working relationship with. I'm on the Slack channels of a lot of the portfolio companies I invest in, and so all of those things. But really, the core commonality to all those answers I just gave is it's about the founder and the team. But of course, part of what inspires confidence in a founder and team is the way they articulate their business model and the traction that they've had to date.
Sure. And I was hoping you could tell us a few of the successes you've had in terms of companies you've worked with so far.
Yeah, I've had a number of successes that came, at least in part, from being in the right place at the right time. Betcha is a company that was just acquired by Vivid Seats at the end of last year. I mentioned that our macro thesis is a convergence among things like ticketing and sports betting. Vivid Seats is a ticketing company. Betcha is a sports betting fantasy sports company. They have now combined. And so not only was that a financial success, it was a great validation that companies would be exiting for exactly the reasons that we expected them to. Another great success that we've had is along the lines I was describing in regards to other forms of esports betting. There's a company called Players Lounge that has raised money from all fantastic investors: Y Combinator, Samsung, Comcast, Courtside Ventures, Griffin Gaming Partners. And they are, I believe, the number one platform for peer-to-peer esports betting, for video game wagering, me playing against you in FIFA or NBA 2K for money. And now are the pioneers of peerless wagering, betting against the house on your own video game performance. And so they have some pretty big announcements, including their Series A announcement coming up soon. And that has been just a tremendous success on the traction side. really, I'd say what the biggest success for us has been steering our brand as Sharp Alpha into a position where all the top entrepreneurs and companies want to work with us, come to us first, often before they're even raising money, and allow me to structure my day where I'm spending my time talking to people I enjoy talking to, having conversations where I come out of them with more energy than I had going in. And if you could set up your whole day with only conversations that you actually result in increase of your energy and capacity, it kind of makes all those calls almost like something you're getting paid for, even if you're not, because you're paid in the energy that you then have to go work on whatever else is needed. But as mentioned, Betcha was an early exit and success for us. And Players Lounge has been one on the traction side. We have a whole host of portfolio companies listed on our website. All of them are moving up in a very northeasterly, up and to the right direction on their core traction metrics. So fortunately, we've been good at picking so far, and the market has treated the companies that we've invested in quite well to date.
Oh, that's super to hear. Next, sort of moving on to picking your brain about the industry, less about Sharp Alpha. I was wondering if in sports betting you sort of detected any macro trends that are currently affecting how the whole industry looks at the moment.
Yeah, a number of important trends are at play, certainly in the last 6 months or so, not just in sports betting, but in all high growth areas. Valuations have pulled back, revenue multiples have compressed significantly, in part due to sentiment, in part due to rising interest rates and the background economic environment, and in part due to specific concerns over customer acquisition spending and what the path to profitability for these companies looks like. And that certainly has ricocheted through the public companies back into the private markets. But within that trend, I think what is also happening is we're noticing a dispersion, a widening gap, especially in the US, between what you might call the haves and the have-nots. There are a relatively few number of operators that command the overwhelming majority of the market share in the industry. And not only that, they tend to have the best, most easy to use products with the largest menu of betting options and the best rewards programs and the most satisfied customers. Whereas the companies with less market share tend to be on the other end of that spectrum. And from there, you get this self-fulfilling prophecy where companies that have significant market share use their resources to build the best products. Those products attract more and more customers, which increases their market share, which increases the resources they have to put back into the product and acquire more customers. Whereas the flip side is the case for those on the other end of the spectrum. And so, although there probably are a few select operators that will find their way into a niche, sort of regional, local, non-national or international presence, and figure out the best way to monetize maybe a combination of online and brick and mortar assets, I think we are starting to see a real separation between the brands that will be around for quite a while and those that you might not hear from so much anymore going forward. And I think those are some of the key trends that I see from a macro perspective in the space.
Interesting. What about SPACs, the special purpose acquisition companies? Do you think that they will continue to be a force in the industry in the coming years?
So SPACs are especially well suited for high growth, forward looking, high margin companies that maybe haven't had as much traction as they would like in the past, or are relatively new and nascent companies and therefore didn't have the time to generate that traction. And the reason for this is that when you raise money for a SPAC, you primarily raise, as you do with a startup, based on forward-looking projections and pro forma revenue for the next 3 to 5 years. Whereas in a traditional IPO, you're generally looking more at historical data. And so that's one of the reasons why the sports betting industry attracted so many SPACs that raised capital specifically to target the space, because it's a nascent industry with companies that have the majority of their growth trajectory ahead of them. In the recent, let's say, 6-month pullback in public company valuations, one of the impacts has been that it is much harder today to go out and raise a SPAC for the first time and say, I need X dollars to fund a blank check acquisition in the sports betting or sports media and entertainment space. In part, that's because of the state of public capital markets. And in part, it's because a lot of the SPACs that, excuse me, people have heard of and have heard announced have yet to find their target and consummate that business combination. And so my answer is that I don't know if it's the best time to be going out and raising a brand new SPAC targeting sports betting. There are a number that have the money in the bank and have been looking at and are continuing to look at various prospects. What likely will happen is at least some of them will pursue what you might call non-traditional business combinations. The typical SPAC deal is essentially taking one, maybe two, in the case of, let's say, DraftKings and SB Tech companies public. But really, it's just a route to an IPO. You're usually selecting one company and taking that company public through the SPAC. What I think you will see is at least some of these sports betting specific SPACs will take more of a roll-up strategy where they buy 5 or 10 smaller assets, combine them together, use management team experience to realize synergies and sort of repackage some of the core competencies of those 5 or 10 businesses, and then combine that with now public liquidity to grow the company a bit more and eventually package it either for a sale or for something of that nature. So I think it's an interesting time. SPACs unquestionably were disproportionately magnetized toward the sports betting space. And I think for some good reason, but a number of them now are in a bit of a precarious position because of how valuations have moved compared to the time when their investors gave them that money for that blank check acquisition.
Mm-hmm. Well, speaking of that precarious position and what you talked about before about operators sort of consolidating or getting their a smaller number of operators getting a bigger share of the pie. I was wondering about the possibilities for future companies coming into the industry. Do you see? I guess two questions here. Do you see a new kind of company, a new area that needs to be filled that hasn't been filled yet? And if so, because you're in venture capital, are there any companies that you think will be, exploding in the next year that perhaps aren't as well known right now?
Yeah, so I think on the B2B side, there's a ton of opportunity. We were talking about esports betting. Well, obviously, in order to have esports betting, you need to have esports odds providers and risk and trading teams and data providers and providers of data visualizations that show people who don't have a live view of the match what's going on in that match. Infrastructure that has been well developed for traditional sports, but not so much so for esports. There's a handful of companies that are pursuing exactly that. Grid, Baze, Odin, and PandaScore are the four that come to mind that are in the sort of sport radar genius sports of esports kind of category. And I think there's a litany of examples of gaps in the market that DraftKings, FanDuel, Bet365 are not going to solve themselves, but will rely on back-end providers for. The B2C answer to your question, it's a lot more difficult for a new entrant to compete with DraftKings, FanDuel, MGM, Caesars, especially on customer acquisition spending, on navigating and dealing with regulatory burden, on paying and achieving and securing market access and proper licenses. But the prize is so significant. The end customer is so valuable. The LTV of the end user is so large that it incentivizes a number of companies to try this. I think you are going to see a number of specialty B2C operators, fantasy sports and sports betting just for motorsports fans, for mixed martial arts fans, for esports fans. Perhaps over time, those end up getting rolled up under a multi-brand strategy, which is something we've seen the Europeans do quite well. And then you will have a few companies that are going directly after DraftKings and FanDuel's market share and trying to have a more intuitive, curated, customized, personalized interface. I expect that you will see at least a few attempts on the B2C side at something like a micro betting only sports book, or a micro betting and player prop only sports book that really caters to that sort of entertainment seeking and social better, and maybe is built more natively and interoperably with other media experiences and social experiences. So it's a really exciting time, even though the existing market leading apps certainly have come a long way in the past 4 years since PASPA. They still very closely resemble the products that you see in the UK and Europe and in Australia, where we imported all this technology from. But the US betting populace, the core customer here, is quite different from other places in the world, and has a number of really unmet needs and preferences that perhaps it will be up and coming startups and growth companies that figure out how to solve.
What would you say are some of those US specific needs?
I think, yeah. So I think that the biggest difference between the average US sports bettor consumer, and let's say that of the UK or Europe, where we have imported technology from, is the emphasis on entertainment value and often social value. Your average DraftKings customer is psychologically, whether they realize it or not, classifying their deposits as entertainment expenses, not as capital investment from which to earn an ROI. Whether they realize it or not, your average DraftKings customer never expects to make a withdrawal from their account. And that's because what they really are doing is paying for a shortcut to having something to root for tonight and some skin in the game. They're paying for instant membership in the fraternity of people who place that same bet and can all complain together if it loses at the last second in some terrible bad beat, or who can rejoice together if that bet wins, and are paying for the social camaraderie and competition that comes from betting with and among people you're in the same physical location as or engaged with socially. And if you, I think, really want some evidence of this, look at a William Hill, or I guess now they'll be run by 888, betting parlor in even the nicest part of London. And it's kind of, similar to an ATM vestibule, which is very transactional in nature. They're meant to get in, place your bet, and get out. Whereas a Las Vegas sportsbook is a place where, for many customers, the odds are the least important facet of the entire user experience, because it's a party, it's a place to see and be seen, it's a place to hang out with your friends, to socialize, to experience the ultimate sports bar that a sports fan could ever experience. And so I think the big unmet consumer needs and preferences that in many cases early stage companies are better equipped to address are exactly these: removing friction from the process, removing decision fatigue from the process, enabling people to more efficiently and intuitively figure out and use these apps to enhance their social and entertainment focused sports fan experiences.
Sure. Yeah, it's pretty interesting insights there. I just have one more question, which is back to Sharp Alpha. Where do you want to be as a managing partner of Sharp Alpha Advisors? Where do you want to be in about 18 months' time, would you say?
Yeah, hopefully in relatively the same place, but with companies in the portfolio having been marked up to be worth a lot more because they've raised future financing at higher valuations and gone on to develop and secure the traction needed to justify those. And we had to turn away quite a bit of money, quite a lot of investors. We had a hard cap that we set on the size of our fund. Once we hit that, we did not admit any new investors. Of course, the irony and psychology of fundraising is that the moment you tell people you're not taking any more money, that's when everyone wants to give you money suddenly. And that's just investor psychology for you. But we're now at a point where we have so much deal flow, and there are so many prospective limited partners that want us to manage their capital, that we'll be opening up another vehicle in the coming months to take on some of that capital, and probably announcing it roughly, let's say, 18 months from now, if I just look at typical fundraising timelines. So hopefully if we talk again 18 months from now, the companies I mentioned today and the companies on our website today are all doing quite well, and a number have exited. And we're well into the process of getting our next fund up and running and out the door.
Well, happy trails. I wish you luck on that.
All right. Thanks a lot. Thanks for having me.
All right. Yeah, this has been Lloyd Danzig speaking to Gaming America. He's the managing partner of Sharp Alpha Advisors. Thank you, Lloyd.
Thank you.